CEO of the World Floor Covering Association. Thank you for joining us for this week's webinar on everything latest and greatest to deal with the coronavirus, COVID-19. You'll note that we're trying a different time this week. We really want to find the time that works best for you. We're not only on a different day, Friday this week, but we're also at a different time. And we will continue to experiment with this as we look at how these webinars serve your purposes going forward. As I mentioned, I'm CEO of the World Floor Covering Association, and we've been actively involved. Many of you have joined us for multiple webinars like this as we have tried to keep you up to date on the latest and greatest legislation coming out of Washington, D.C., affecting you and hopefully creating some positive things for you related to the coronavirus. In fact, through our lobbying firm, Lobby It, we have been able to get very quick, early insight on what the latest legislation is going to be, and many times we have been able to influence that legislation. Jeff King, who you'll talk to in just a moment, practiced law in DC for a good while, and we have a phenomenal relationship with Lobby It, our lobbying firm in Washington, DC. So for the purpose of this call, again, we'll be informal. I think one of the things that you've all noted to us that you like about these calls is you have the chance to do live Q&A with us. And so we're going to give you some time at the end of this presentation to do that. If you want to ask questions, just use the chat mechanism at the bottom of your screen and type your question out. And then when Jeff finishes his PowerPoint, I'll go back and ask those questions one by one. Before I turn it over to Jeff, let me just remind you some of the things that the WFCA is doing on your behalf. Most of you, I assume, that are on this call are our members, although that's not required, but membership to our primary membership is free. So if you're not a member of the WFCA, you should be. Our voices are much louder combined, and we get a lot more done in DC when they see that we represent a greater percentage of their clientele. So we would love to have you join us. Again, if you're a primary member, and that means you're not a distributor, a manufacturer, some other side business, you are a professional flooring retailer, then your membership is now free to the WFCA. We did that with the intent of combining our voices to address key issues in the industry, like installation, and then the coronavirus happened and it became kind of the key topic. So you'll find that we have done everything we can to adapt to meet your needs. And one of the things we've done that we're most proud of is we have changed our website, wfca.org, to provide to you the latest information related to the coronavirus. There's a coronavirus response tab right there. When you click on our website, click on that tab, it takes you in. You'll see all the past communications we've had, all the past webinars that we have had related to this topic, things related to anything from the Small Business Administration, PPP loans, who's shut down, who's opened up, state-by-state guidelines, about anything you can imagine. In fact, I would tell you, if you're looking for an answer, go to the website first. There's a pretty good chance that Jeff has already responded to somebody that has your same question. And all of his questions are in a frequently asked questions segment that is available to you on that website. All right, with that said, I'm going to turn you over to Jeff King. Jeff is the legal counsel for the WFCA, a position that he has held for over 20 years. He far exceeds me in his capacity with the WFCA, and he is a vital member of our team. I remind you, he obviously has not practiced in all the states in the United States and Canada, so what he offers you is guidance, and that what we encourage you to do is get with your legal professional, accounting professional, whatever he might inspire in you, and get the information you need pertinent to your business. But Jeff, because of his insight, his practicing in DC, and his knowledge of the industry, which I must tell you is second to none, gives you a pretty good understanding of everything that's coming from a legislative standpoint, its impact on you and your call to action, what you can do to take advantage of what has been put out there for you. And Jeff, as I turn this over to you, I just want to remind people, if I'm not mistaken, the deadline to put in for a PPP loan is June 30th. Is that correct?
That's correct. You have till June 30th.
So you still have time if you've not done it, and we encourage you, if the need is there, certainly take advantage of what the government has done. And with that said, Jeff, I will turn it over to you.
I'll just follow up on that, Scott, and the idea is that you should all look at your opportunities on the PPP loan. If you're a sole proprietor, you can get $20,866, and it's all forgiven. You don't have to worry about it. It's purely your salary. You're allowed to pay yourself that much money back with the extended 24-week period. If you're a single person LLC, limited liability corporation, do the same thing. If no matter what your size is, it may not be a big loan, but it may help you through this crisis a little better. And there may be a second round of these, as we'll talk about later, which once you have the first round, you're probably easier to get the second. So with that, Louis, why don't we put up the slideshow and see if we can help you all with this. We're going to talk about a bunch of things today, but we're going to start probably with the Paycheck Protection Program and some of the new rules, applications, and the many questions it's raised. Next slide. So again, I'm going to talk about the forgiveness applications, which came out about 2 weeks ago, and the confusion they've caused. We're going to talk about some new restrictions on testing employees. So I want to make sure nobody finds themselves in a pickle because they're trying to protect everybody by testing employees. There's some new guidance on reopening, and there's a whole bunch of potential litigation I want you all very much aware of. Next. So let's start with the new forgiveness forms. They've given 2 forms now. They used to have this one form. It was, I think it was 9 pages long. It had, with the instructions, was something like 16 pages long. Well, they've given you another new form, and they've managed to cut 2 pages out of it. It is still equally confusing, and if you're going to use the long form, I'm going to tell you that the long form, start from the back and work forward. The answer is that when you fill out the form, you have to make reference to what is called Schedule A, and then Table 1 and 2. And it's easier to fill out Table 1 and 2, which will then allow you to fill out Schedule A, which will then allow you to actually fill out the loan application. They've also given an easy forgiveness application, which is simpler to fill out. It's fewer pages, I think it's 4 altogether. Fewer calculations, you need less documentation, and you can get a lot more information in all of these rules and regulations by going to WSCA's website and clicking on the Small Business Administration Issues, New Rules and Forms, and it'll give you some further information. But let's go over some of that right now. Next. Okay, the easy form. Here's who can use it. If you're self-employed with no employees. So if you're a single person LLC, if you're a partnership with one partner, you know, if you're a sole proprietor, if you're self-employed with no employees, you automatically get to use that form. And the answer is because of the 24-week extension from 8 weeks, you also get to deduct the full amount of the loan, which is going to be $20,866. However, you can also reduce it, get it, even if you have employees, if you either, 1, did not reduce your FTEs, your full-time employee equivalents, or you continue to have not reduced their pay by more than 25%. So if you've maintained during your application, during the covered period, the number of full-time employees you have, and you've not cut their pay by more than 25%, excluding overtime, you're fine. You can make up the difference if you're a little bit below that by giving bonuses out at the end of it. There's a lot of ways to get there. Or you could not, because of safety orders by either HHS, CDC, or OSHA. But it doesn't include state shelter-in-place law orders. So the question is then what is? Well, a good example is that the CDC and Occupational Safety and Health Administration has issued orders saying don't let so many people in your facility. So you may have a warehouse, and you may have now where you've had 10 people in that warehouse, you're only allowing 5 to come back so that you can do social distancing and reduce the number of things. You may have created 2 shifts to do that with shorter time periods. So you have a shift in the morning for 4 hours and a shift in the afternoon for 4 hours, for example. That is one of those reasons why you can reduce that. Document the fact that that's why you reduced it. Okay, next slide. The new forgiveness form also has the safe harbor rules, which you need to remember to do. So the safe harbor rule says that if you restore the number of full-time employees by December 31, 2020, as you had on February 15th, 2020, and you have not cut pay by more than 25% by December 31, 2020 for those employees, as they were paid on February 15th, 2020, then that's a safe harbor rule. That's fine. In other words, if you can restore your employees' number and to within 25% of their normal pay, then you can get a forgiveness. The question is, did you have to wait to December 31 to file for that? And the answer is no. You get to apply for it as of the date of forgiveness up to December 31. So for example, there's a big concern that there'll be a second wave of this virus come the fall. So if you find that you've used your loan, you've taken the 24 weeks or the 8 weeks, I don't care which you use, but you have it, and all of a sudden you're waiting to file it, you have to file it in 10 months. If you don't file within 10 months of the end of the period, then you are, the loan is completely considered a loan and you have to pay it all back. But if you can look at it and all of a sudden say in September, you have everybody's back to being full paid, file it that day, because you'll get to use the safe harbor rule. So that's our advice on that one. You don't have to wait till December 31 to get there. If you already have your full-time employees, if you can, during the time period, they do come out to be the same as you had the prior year or the prior grouping of years, then you go ahead and file it when you want. But if you're having trouble getting everybody back, it may be worth holding off applying for the forgiveness until you feel that business has increased enough where you can meet these safe harbor rules, same number of FTEs, and you haven't cut pay by more than 25%. Next slide. Now, counting FTEs has caused some problems. A couple of ways to do it. One is you can take the total hours worked per week by your employees and divide by 40, and that gives you your FTEs. Then you add in your non-hourly employees, and that gives you your total that you have. An alternative that they have said is you can take each employee that works 40 hours a week or more and count them as one FTE. So if you have, no overtime is included in this, and then you add a half of employee for every part-time employee you have. And that seems simple enough, except that we've already had this question come to us. How do you calculate the first 4 days? No matter what your pay period is, January 1 is a Wednesday and January 3rd is a Saturday. Whether you start your payday on Mondays through Fridays, most of you are open 7 days a week, I assume. So you're generally going to probably start on Monday to Sunday, or you're going to start on Sunday to Saturday. You're going to have this odd chunk of days involved in it. To me, it creates confusion. So we've asked the SBA, can you give us any instruction on this? And they cannot so far. We talked to them. I talked to them as early as yesterday about it, or as late as yesterday. Talked to them earlier in the week as well. So the question is, can you start, say, on January 5th, your first day of the week, or the next full pay period, whatever that pay period is? It's not clear. I don't think that's outrageous. Can you use each week you paid between them? Remember, they said that you had to incur and pay your expenses during the period, and they've interpreted that saying, so long as you paid the expenses during that period, even if they were for expenses prior to the covered period, it counts. And that's how they've determined that. So if you pay your rent, you get your loan on the 10th of May, and your rent's due on the 15th of May. Well, that rent is not for May 10th to the May 15th. It's from April 15th to May 15th. That counts as part of what you can pay for. You can include that in your loan, even though it only covered 5 days, because you're also going to lose the other 25 days at the end of the period. Well, it seems to me you should be able to do the same thing here with the employees. And basically, and there's a number of accounting firms and banks that are using this system, that you simply take the number of each pay period, figure out how many employees you paid during that pay period, full-time equivalents, and then take that as your weekly average and take it week by week by week until you hit December 31st, February 29th. The alternative is to proportion out the first 4 days. That's another alternative to do. But this is unclear. Work with your bank, the lender, to do this. But it would be my recommendation at this point, if it's the simplest way for you all, if you have varying employee numbers during this time period, the January 1 to February 29th, or the prior year. Remember, you also get to use February 15th, 2019 to June 30th, 2019. The problem is that also doesn't come out to an even number of weeks of weekly pay. So if you, whatever period you use, I would look at when you paid them and figure out how many employees are involved in each one of that full-time equivalents were involved in each one of those pays. And that'll give you, add them up, divide by the number of weeks you're looking at, number of weeks you paid for, and boom, you've got your average FTEs. Okay, next slide. There is a limit on the owner employees. So if you're an owner employee, you cannot pay yourself more than $15,385 if you use the 8-week covered period, or $20,833 for the 24-week period. The way they calculated that is they figured that you had a cap of $100,000, the most you could pay yourself. Any employee cannot be paid more than $100,000, okay? So if you take that and divide that 100,000 by 52, that gives you a weekly salary. If you multiply that by 8 weeks, you come up with $15,385. If you multiply it by 24 weeks, it comes up to 46 some thousand. But since you're capped, they put a cap on it of up 20. So you only get $20,833 for it. If you're an employee, an owner employee, you cannot add in benefits that you paid for, healthcare expenses, retirement contributions, or state taxes, usually for unemployment taxes. Next slide. This creates a lot of confusion. So who's an owner employee? First of all, if you file a Schedule C, and that's usually an owner of an LLC, it's usually it's a partnership, it's a sole proprietor. Those people are all covered. That's quite clear. If you have a partnership, you're going to file a K-1, and then you're going to have a self-employment tax listing. I forget the form number on it, but you'll file that, and that is you're self-employed, and the limit applies to you. It's not quite so clear with all LLCs that have more than a single employee. And it's certainly not clear with subchapter S Corps and C Corps. So if you're that structure, it gets a little more confusing. The earlier regulations said LLCs were covered by the limit, as were subchapter S corporations. But subchapter S corporations were not covered by the limit on how much you could pay for benefits. You could also include the benefit amounts. So this is up in the air. I talked to the Small Business Administration this week about it, and they're still trying to figure that out. They have not put a test in. It gets more complicated. What's an owner employee of an S corporation? How much do you have to own? You know, I have a client that is an S corporation. It has 7 owners, and their annual sales are somewhere in the nature of $17 billion a year. They're not in the flooring industry, folks. How do you figure, you know, how much of that ownership is each one person? They are divvied up. So it becomes complicated in this issue. As you know, there's a question, people have looked as low as 2%. If you look at the forgiveness form, there's a demographic data they want to collect, and they use 20%. Well, they use that as an ownership limit as well. I don't know. We've asked all those questions. None of them are clear. Work with your bank, and the bank's going to make a determination of what should and should not be covered. Push them a little bit on it, and we will continue to keep you advised. But at this point, we're still a little up in the air on some of these issues. Next. This is just added on. You may have read, there's enhanced transparency. So there's a compromise reached between the parties in Congress and Department of Treasury and the SBA about transparency, information about each loan. So the compromise, they will disclose the business name that got a loan, their address, their NAICS code, their zip codes, their business type, and their demographic data, and the amount of loan in ranges. They're not going to tell you the exact amount, but they're going to tell you whether you got a loan in any one of these ranges. The concept is this allows Congress and Treasury to better monitor and determine how the loans are used, where the loans are used, and whether if they go another round of loans, whether they need to make other changes in the loans program to ensure they get to smaller loans. Get the loans to smaller employees, employers and such, and smaller businesses. So that's the concept behind it. There's also a pretty strong belief that it's also designed to create some embarrassment, since a number of Congress men and women have gotten loans under this program. But if you have a loan of over $150,000, that data will be out there about that you got the loan with your address and the range in which you got that loan. Okay, next. There's new restrictions on testing, and this is going to confuse you all. So when I first read it, I kind of laughed at it. You can test an employee to determine if they currently are infected with COVID-19. Okay, you can use a viral, not just a temperature. You can use a viral, a regular swab testing to make sure they're not currently infected. What you cannot do is test to see whether they had antibodies, and therefore you feel a little safer having them come back. And OSHA has determined that that violates the Americans with Disability Act, because whether you had the antibodies or not does not affect how you can do your job. They've also said that you have no obligation to accommodate risks to employees' family members. So if an employee says, I really can't come to work right now, you got to find some accommodation for me because I don't want to bring this virus home to my family because I have some, my wife has diabetes. My wife has a heart condition, which are all susceptible issues. My parents live with me and they're all over 80. Doesn't matter, you can't do that. EEOC has also issued some new suggestions on what you should tell employees when you start bringing them back. And I've listed, if you, when this is published on the website, you should be able to click right on that hyperlink. If not, you can type those words into it and you'll come up with the EEOC recommended information to pass. So I hope that helps. Next. Be careful when you bring people back not to discriminate. A lot of our folks will be called up and said, I've got this 75-year-old person, I'm really worried about him. I have a pregnant woman, I'm really worried about him. Somebody who is, has diabetes, is overweight and has a heart condition, I'm worried about him. And so I don't want to bring him back. I want to tell him no. The answer is you can't do that. It's called discrimination. And you really cannot do that. I would go back to WFC's website again. These are all the hyperlinks to it, and also the titles of them. You can go back and link on any one of these, and they'll give you the information you need to know on these topics. Opening up safely, a practical guide. There's CDC put a decision tree on how to open up, who to bring back, when to open up, what to do. And we've also given you information on ensuring you don't discriminate and what you have to deal with that. So I recommend you go to the website if you need more information on this. I'm also here to answer your questions at the end of this. Next. There are new guidance on reopening. OSHA issued this week guidance on returning to work for non-essential businesses. I just listed these down here. You can click on any one of them and they'll bring you, once you get to opening this, or type any one of these into your web, your browser, and you'll come up with this, and you can look and read these. We have, I believe all of these are also on the WFCA website. And if not, I'll make sure they are. And they'll give you can just pull up and read what OSHA says. We also have a sort of a synopsis of all of these recommendations put into a single document, which we had provided to you in the earlier slide. Next. I want you to understand these OSHA guidelines are guidelines. They're guidance. They're suggestions. They're not enforceable rules. They're regularly updated. OSHA has also provided posters on hand washing, how to use and maintain a respirator. In fact, I think have 3 posters on respirators alone. 10 steps all workplaces can take to protect themselves. You can go online, you can get that. You can go to their website and get it. While they're not enforceable, OSHA are looking at people who are taking no precautions and citing them for failing to make a safe workplace. So while they're not going to fine you for not doing these, they're going to fine you if they think you have not taken fairly precautions. There's also, state has sued. I put this case down, Massey versus McDonald's. I think the decision came out yesterday or the day before, that McDonald's was forced to train their people on social distancing because the state came in and sued them for not properly training their people, their employees, and and how to deal with their customers. So The fact is while these are guidelines and suggestions, you're better off applying them anyway. For one thing, you'll be able to sit there and say, listen, I did everything OSHA, CDC, and my state asked me to do. How can I possibly be liable for not doing enough? I've done all the right things, because liability to your customers' employees is on the way. This is going to be the next big set of lawsuits we're going to see, some under workers' comp for employees and some under class actions we're going to see emerge. So we want you prepared by saying, look, I did all the things I was supposed to do. So go back, look at these rules, look at what we suggest you do, and put together a nice little system. Some of them may not be practical. I understand that, but many are. Next slide. Potential litigation. The Panic Risk Insurance Act is where the feds are going to help. It's much like after 9/11, and there was such a confusion over what insurance applied and issues on it, that the federal government helped help pay for to ensure people got coverage, so there was little dispute. This insurance program is supposed to cover business interruption as well as workers' comp, to ensure people get this coverage readily. It's effective as of January 1, so it's not going to cover your disruption now. That was part of the compromise. But to participate in it, they will all have to insure for that from that point on. Each insurer company will, if they want to participate in the program and get this federal funding. Assuming there's another surge in the fall or early after January, this would be a very important thing. We have been an active participant. We have been sending testimony up on the Hill. Our lobbying group has been very active in this. We're part of a very elite group that they look to. We're the representative of the small businesses in this country. WSA is renowned for that and has done so. Okay. There's also a liability immunity legislation that we've looked at. These are the states that have it already. There's some others. There's a federal proposal. We're putting together a grassroots campaign we're going to look at. We're trying to determine whether we want to push it at the state or the federal level. I think we're going to quite possibly do both. Also, just for your own thing, go to WFC website. You can see a liability waiver to protect against COVID-19 claims. It's very much what President Trump did at his recent rally. This is simply saying you recognize coming into the store is not risk-free when you're around people who could have the disease, but you're not going to hold me liable if you get it. It's easy to do massively with your employees, much harder to do with your customers. Next slide. There's new funding. Remember, we talked about this earlier. PPP loan still has $100 billion remain unused. Apply for it if you have not yet. What are they going to do with that $100 billion when it's over? Will they extend the time? Will they use that for something else? There's also talk about creating a new PPP loan program, hopefully a little better fixed than what we had with all the confusion, that may allow people to apply for a second PPP loan. They're discussing low-cost capital loans so that you can pay for equipment. One of the things we recommend is that your front desk put up a plexiglass barrier to protect everybody from spread of the disease when customers come in. Well, you could get a loan to start to put these barriers in and do certain things of it. Grants on fixed costs. It'll look like you're saying, if you have certain fixed costs during this pandemic issue, maybe we'll just give you grants to pay for those fixed costs that you can't get out of. There's a retail relief fund being looked at. That's primarily looking at the hardest hit retail industries. Obviously, they're focusing initially on bars and restaurants and those types, but you two folks have also had a big impact on you, particularly you've had hard and rigorous shelter-in-place rules that have not exempted you as essential while you were losing business to Lowe's and Home Depot. So there may be money there as well. And as you know, there's been talk of an additional stimulus checks going out. That will help your employees probably more than most of you unless you're a sole proprietor. Next paragraph, or slide, I mean. There's also tax relief. There's a bill out there looking to do credits on return or retaining employees, credit for buying personal protection equipment and other safety stuff. So if we don't get a grant for it, maybe there'll be something where we can get at least a tax credit, which is, and obviously if you buy this stuff, it's a business expense, but that business expense just lowers your taxable income. The tax credit literally lowers your taxes directly. So you would want that. They're talking about credits for training and retraining employees. They're talking about a payroll tax holiday. So you get to retain what you normally would have to pay in. And there's even talks about tax reform during this issue. So all of that is, we're looking at all of those. We're lobbying on some of them. Some of those are in their infant stage. Some of them have no chance. But we're keeping our fingers on the pulse because they may be traded and utilized so that we can maybe get better relief for all of you. Next. And that's it on everything. I hope it's not been too confusing or too overwhelming. This has been a difficult time, and we look forward to see if we have any questions.
Yeah, and I'll just remind everybody, Jeff, that the questions, just put them in the Q&A segment. We have a few questions right now. I'm going to start with one that I just answered by typing it out, because you and I have talked about this often. But Jeff, what is the guidance on the forgiveness loan? Do you have to wait for 24 weeks if you choose not to do the 8 weeks, or can you do it anywhere in between?
It's not clear. That's the one point they didn't make clear. They allow you to, the answer, there's probably, unless you're a sole proprietor, you're at that easy kick out number, you're probably better off waiting the 24 weeks anyway. Or you're better off with the 8 weeks because you've used the 8 weeks and you've been paying your employees, and you can get the full thing. You've got to look at when it's best to get the full time, the most amount forgiven. But also look at these FTEs and salary issues as well. And you got to balance all of that out. But so far they basically said it's either 8 weeks or 24 weeks. They have not said you can do something in between.
And Jeff, I know you've walked me through this before, but what are the reasons somebody might choose to do the 8 weeks?
Well, a lot of your folks got these loans early in April. Their 8 weeks are over. They went and brought their people back on. They may have paid them to stay home. They did things to get to that, at least as close as they could to that 75%, which was then in effect a payroll cost. Why wait? You're now going to start laying off people again, possibly. There is an issue that if you tried to get them back and you couldn't, you could, that doesn't count against your FTE or your 25% salary rule. All of these, there may be reasons to do it now because you've paid for people you didn't need just to keep them on board in order to get the forgiveness. And now you can let them go. Your business is still down. It's not bumping. So you may do it. So there is a reason to do the 8 weeks. But again, if you got your loan June 5th or later, then you have to use the 24.
And Jeff, can they just, I know you have to use the 8 or 24, but are they allowed to file for forgiveness when all the money is spent?
They're allowed to file for forgiveness at the moment, 10 months after the close of the covered period. So if you use 8 weeks, you have 10 months to file it in. If you use 24 weeks, you have, well, it says 10 months, but there's no way to get to the 10 months. There actually is. You could actually file it in 2021. Yeah. Yes, you have 10 months to file it in after that. So when you file for it, after the close of your covered period, it has to be done within 10 months. That's all.
Okay. This one says our full-time sales are straight commission. Michigan unemployment is $360 a week, plus the $600 if the government provided, and they were closed for 2 months. Has anything been done to address commission employees only, people that are paid solely by commission?
Yeah, commission employees count as your FTEs. If you couldn't bring them back because they didn't want to come back because of the extra $600, then you don't have to worry about that. Obviously, you can pull them out of that FTE account so long as you've documented that and that you tried to get somebody to replace them and couldn't at that skill level. But commission employees do count. They were part of you calculating the loan, and so they do count towards the payout on it. So they will count towards your FTE and the amount you paid on your to your employees. But remember, to get to the 60%, you can play bonuses. You can prepay retirement benefits. You can actually technically prepay your health insurance benefits ahead of time. But so if you have a retirement benefit, I'd be a little cautious how much I pay out of that retirement because they may not last to the end of the year. But if you sit there and say the normal retirement benefit that we pay in is $5,000, I'll give them $2,500 now of it. And you do that, or you can just pay a bonus at the end of it to get to the 60%. Getting to the level is a little easier now. The question is getting to the FTEs, the full-time employee equivalents. That's a little harder with commission employees.
Yeah, and Jeff, Phil Koufidakis, our friend who has been all over this stuff as well as you have, he just cited that the bank you borrow from dictates the timing of the forgiveness, and in his case, their bank has not yet finalized their guidance on that. So
yeah, these two forms we talked about are forms the SBA has published. You're not required to use those forms. A bank will dictate the forms they want and the documents they want. This is the basis of what they do. Most will probably use this basis, but most banks have yet to finalize how they're going to do this, because remember, they determine the amount that's going to be forgiven. And then they submit that to the SBA, who either approves or disapproves it. But the SBA does not calculate the forgiveness. They just look for obvious errors and things that they think is wrong, but they're not doing any of the calculations. They're relying on the lender to do it. So you're absolutely right. Most lenders have not yet determined how they're going to do the forgiveness aspect of it.
Now, Jeff, at the very beginning of this, you noted that the new form came out somewhere about a week and a half ago, but there was a form before that was quite cumbersome, right?
Yes.
And then the new form came out. Is that at the same time? Is that when the abbreviated easy form came out as well?
Yeah, I believe, I'm trying to think on this. I believe it was the 16th of June, but I'd have to go back and look at it. They came out with both forms. There's two forms. There's an easy form, about 4 pages long, and there's the full form, which is a little shorter than the earlier full form, a little easier to use. I don't think that much easier personally, and raises the same problems we had before, but they are there. But again, it's your bank will tell you what forms to use.
Yeah, so Marty Cohen, who I know you've been dialoguing with on several issues, had asked that question. Is that the one dated, is the loan forgiveness short form the one that's dated revised June 16th, 2020?
If you get the loan forms, by the way, not attached to them is a separate set of instructions on the form. So when you go online to get that, also ask for, say, instructions as well. There's some instructions in the back, but there's a whole nother set of instructions on how to use both loans, both forms. But again, ultimately, it's your lender who will tell you what form they want.
Good. All right, guys, I'll chat here for a moment, just waiting to see if any other questions come in. Again, use the chat format to do that. And I just want to remind you guys that much is going on the installation side as well. The Floor Covering Education Foundation, which was formed to provide, really to seek out new bodies and new blood into the installation field, is moving forward at full-fledged. It hasn't slowed down. In fact, I have a weekly call with retailers from across the United States, and many of them have said their biggest concern is that when we get the influx, as things start to open back up and people that have been looking for that flooring or looking at that flooring for months now have decided they want to change it, the biggest thing that could impact us is that we don't have enough professional installers to get it done. And so we realize that we're moving full-fledged. We do have financial support from many within the industry and are seeking more. We have an interim director, Steve Abernathy, who you've seen on these web conferences, periodically talking about the financials and how the 401k and other things are impacted. Steve is the CFO of the WSCA, but also serving as the interim director of the Floor Covering Education Foundation. So just want you guys to be aware that we are indeed moving forward on that and continuing to seek answers and guidance. We're working with guidance counselors in high schools. We're working with trade schools. And we've actually had some very promising conversations with some independent retailers in smaller communities that are willing to help us set up a prototype, a model for how we can get installers into smaller communities, not the major metropolitan areas, something that can be duplicated across the United States. So we'll be updating you guys on all of that very soon. Jeff, anything else you want to offer? I'm not seeing any other questions come up. I do want to thank those of you who have been attending these on an ongoing basis. We won't do this every week. Jeff and I were actually talking about some different format, other things that we need to discuss. But if you have ideas of ways that we could use this communication tool to better meet your needs, maybe it's a one-on-one with our legal counsel, so you could just fire any type of question at him. We're talking about an opportunity for you to meet the members of the WFCA, the staff, so you can understand who is doing what here and what their responsibilities are. We hope very soon to be introducing a segment on icons or leaders within the industry, so you can get a better understanding of how they were able to have the impact they did. And that should be coming up soon as well. Okay, here's a question, Jeff, from Terry. It says, regarding giving bonuses, does that fall under the maximum payroll salary pay cap for the 8-week or 24-week period?
The answer is yes, if you're an owner-employer. An owner-employee. In other words, if you're the owner of the company and you're paying yourself your cap. But if you have an individual who's makes $100,000 a year, they're not capped. So they get, you can deduct, they get the full 46, and you can add on, you can put a bonus on top of that. So you can actually, you can do, the only ones who can't get the bonus to increase it is the owner employee who's already reached one of those two caps, whether it's the 8 or 24-week cap.
Okay. And here's another question. Do we need to let the bank know if we are doing the 8-week or the 24 weeks? Is that just a discussion between you and the investment company that you used?
Yeah, I would, I don't think there's a rule on it. You get to pick the time, you pick the period, but I would do it when you're ready to sit there, you get your document. I would probably, even if you're not ready, if you're within a couple of weeks, start talking to your bank now, because they're going to tell you they're going to start telling you what they want. And you want to start collecting that now, so you don't, excuse me, have a problem.
All right. Guys, with that said, we don't want to take more of your time. Thank you for joining us on this Friday. We hope you have a phenomenal weekend. We continue to hope that the recovery is fruitful for you, and that the country continues to operate in a way that is professional. And so if there's anything that we can do for you, please reach out to Jeff or myself. And again, we would love to have your ideas of things that we can better use this time for, to make sure we're having an impact for you. So have a great weekend, and we look forward to being with you again very soon.
Thank you all.